Hey everyone, my name is Sherman, a CPA here at Life Accounting, where we help you save on taxes and increase your wealth. Today I want to help you do this by sharing the latest information that we have regarding Biden's new tax plan and what this means for you. In a recent video, I went over the major items inside of Biden's tax plan according to the Green Book uploaded on the Department of Treasury's website. I read through over 100 pages to give you the top 10 ways that his tax plan might affect you. And the biggest changes in that tax plan were that taxes would rise for corporations and high-income individuals, and on the other hand, more tax credits, or in other words, more money, would be provided to lower income individuals with children, dependents, and those who fit other criteria. So if you have not seen that video, then be sure to subscribe and check it out. In today's episode, I want to give you an update on where Congress currently stands with his tax proposal, and more importantly, how this may affect you. All right, so let's jump right into the news and then I'll explain how this may affect you. So as you know, Biden's original tax plan was expected to cost at least $3.5 trillion. However, to no surprise, he was faced with immediate opposition from Republican lawmakers. They asked him to reconsider his proposal to save American jobs, small businesses, farms, and ranches across the country that would be affected by it. But catch this, it wasn't just Republicans who opposed this. A few Democrats in Congress also opposed Biden's new tax plan, which just complicates this matter even further. For example, Democrat Senator Joe Manchin has said he does not want to spend any more than $1.5 trillion on this bill. Or in other words, Biden will have to slash his plan by more than half if he wants his support. And there are currently debates amongst progressives and moderates in the Democrat Party around specific programs and where it falls on their list of priorities. So where exactly does this leave the tax plan now? Well, due to the opposition, Biden has flirted with the idea of cutting his spending plans down to $2 trillion. And more importantly, this means that everything inside of Biden's tax plan will likely not pass as a result. Here is a clip of him saying it himself.
We're not going to get $3.5 trillion. We'll get less than that.
So here's what this means now. Congress is going to have to pick and choose which spending programs they wish to keep, which includes things like extending the child tax credit, providing free community college, which I hear he's already doing away with, expanded Medicare programs, and so much more. Or they might try to keep most of these programs, but only extend them for a shorter period of time, which also means that they will need less money to fund them. But instead of going further into the back and forth nature of politics, which I'm sure will iron out with time, let's discuss the big picture and how these progressions might affect you. I'll break this down in two ways: how it affects the people the plan primarily benefits, and then how it affects the people the plan primarily does not benefit. So the primary beneficiaries of Biden's tax plan are low to middle income individuals who may be eligible to receive things like the Earned Income Tax Credit, the Child Tax Credit, the Child and Dependent Care Tax Credit, and other credits that would increase under Biden's original tax plan. However, if Biden's spending budget is cut in half, then that means that the money that would go into these types of programs would decrease. Or in other words, those tax credits may not be as high as it originally was planned to be. For example, the child tax credit was only $2,000 in 2020, and Biden wants to permanently increase that credit to $3,600 in his new tax plan. Well, if the money he planned on using to do that is cut, then the tax credit may also be cut or decreased as well, which means less financial support to those individuals who qualify for and need the assistance associated with Biden's original tax plan. Now, let's talk about the people on the other end of the spectrum, the people whose taxes are expected to rise. Now, there were a whole lot of tax increases included in Biden's new tax plan, from taxing unrealized capital gains, taxing long-term capital gains as ordinary income, increasing the corporate tax rate to 28%, and also increasing the top income tax rate to 39.6%. In that plan, he would also limit like-kind exchanges and also increase tax enforcement specifically on high-income individuals to raise more revenue. But if Biden's spending plan is cut, then maybe, just maybe, this means that those tax increases may not be as steep as we originally thought they would be. Because the whole purpose of taxation is to raise money to fund the government spending. And if the government does not need to spend $3.5 trillion, then maybe they don't have to raise the taxes as high as they thought they would have to. These are all potential outcomes of Biden's pending tax plan, which is still being debated by Congress right now. But if you want to stay in the loop on all of these new tax changes and how it might affect you, then be sure to subscribe to our channel, and also be sure to let me know what you're thinking about all of this in the comments below.